All right, so this is going to be part one of the cysteine research indicators tutorials. If you have access to the indicators from cysteine research, then this will be a good resource for you to learn how to use them. If you don't have access to them or haven't purchased them, this may be an interesting video series regardless. You'll probably learn a thing or two about the market. So this is going to be part one. This is going to be going over the easy bands, which is a very, very simple indicator, but I do believe it is a powerful indicator. It's going to help you identify trends, and it's also going to help you identify oversold and overbought conditions, both things that are vital in trading and investing. So let's actually tab over to a Bitcoin chart and throw on the easy band. So first of all, once you get access through cysteine research, within 24 hours or so, you should be able to find these indicators in the invite only scripts section of the indicators tab in TradingView. Then once they're on, you can toggle them on and off, right, through this indicator section here in the top left. So I just threw on the easy bands, and I'm going to walk through and kind of explain how they work and what insights they can help us uncover. So first of all, if we just kind of zoom out here, we're on the daily chart. And one thing to keep in mind is usually with the easy bands, you want to just put it the indicator time frame to 1 day, right? And if you change that indicator time frame to 1 day, it's going to allow you these easy bands to stay the exact same regardless of what indicator we go or drill down to. So we can go to the 3-day and the easy bands stay the same. So a lot of people think they wonder, are these similar to Bollinger Bands? And the answer is yes and no, but no for a couple reasons. So Bollinger Bands look something like this, right? Where Bollinger Bands are based off of kind of like a standard deviation model, and you'll see them tighten, right? Tighten, and then volatility will kind of explode, and they can be useful. Don't get me wrong. I'm not a hater of Bollinger Bands. These are just the easy bands are just a little bit different for a couple different reasons. For one, they don't tighten. This purple level is the 21-week simple moving average, and you'll see that the red and the green levels, as long as we're on a logarithmic view, a logarithmic scale. If we're not on a logarithmic view scale, they'll look something like this. They'll look a little bit weird. I highly recommend using the logarithmic scale. These will always be equidistant, right? And our 21-week simple moving average is used for a couple reasons. One, because these are calibrated based off Bitcoin, and if you look just historically for Bitcoin respects the 21-week simple moving average quite a lot, and it also respects the easy band multiples off of that 21-week simple moving average. So, first of all, how does this work? Well, it works by calculating margin pressure levels off of our 21-week simple moving average. And margin pressure levels are a concept that we're going to get into in the next part of the series when we go through the margin pressure levels indicator. But essentially, it's isolating for leverage trading behavior based off of this moving average. So essentially, you'll see here in this case, we retested our 21-week simple moving average down here at around $41,000. And then we held the red dashed easy band as resistance. Essentially what's going on here is once you go above this red easy band, this dashed level, the market or traders in the market participants can no longer go long on 3x long leverage and hide their liquidation point below this 21-week simple moving average, which is an important concept that we'll get into more in the next part, but that's just, kind of the math behind how it works conceptually. So let's actually kind of zoom out a bit and just, talk about how this is pretty calibrated to Bitcoin. Historically, Bitcoin price action has very, very seldom dipped under the green bold easy band here at the bottom. Doesn't mean that it can't or won't in the future. It just means that Bitcoin becomes very overextended to the downside, right? And is usually a local bottom if it hits this green easy band region, right? And all it's telling us is two things, really. All this indicator tells us is two things. How oversold or overbought is Bitcoin or any asset that we apply this indicator to versus where it's been valued at for the last 21 weeks or roughly 5 months, right? Is it oversold or overbought? It just gives us our bearings on the chart right? When we don't have this indicator, it's very difficult to look at this chart and say, well, how much lower or higher could we go? Or are we overbought here? Are we oversold here? And as soon as we throw on the easy bands, we have a pretty good idea. Historically speaking, Bitcoin's never spent, more than a few hours outside of the green band. So when everybody's calling for, when Bitcoin's dropping, rampantly here and it's about to spill off, or it is spilling off down to 18K, and everyone is calling for $3,000 Bitcoin, we immediately know that that is so far out of left field and just crazy talk. Right? Doesn't mean that it couldn't have gone to $3,000, but we'd probably have gotten several mean reversions on the way before our green easy bands moving down to that $3,000 region. But for the people that we're saying, hey, this is just going to plummet straight shot down to $6,000 or even $10,000, we knew that that was just not realistically, and there was no historical precedent for Bitcoin doing that, right? Because our green bold easy band that came in as support, showing us that Bitcoin was very oversold and that shorts were very unlikely to short it below $18,000 because they can no longer hide their liquidation point above that 21-week simple moving average. Then it grounds us in reality. And when we don't have this indicator on it, we might panic. We might think, Bitcoin is going down to $8,000 to $10,000 in a straight shot. So that's the first use of this indicator. The second is simply trend identification, which, obviously you can see from price action, just in general. Obviously this is an uptrend, but these are a slower set of moving averages essentially. And you can do this with just the 21-week simple moving average, obviously, but when these are pointed upwards, this is, we're generally in an uptrend. And when these are pointed downwards, we're generally in a downtrend. And this can help from a trading perspective of, hey, do we want to be looking for longs or shorts? Do we want to be long biased or short biased, right? Is this kind of bear market starting to level out? Are we starting to move sideways, right? We'll go to the last Bitcoin bear market. We had this downtrend, but then once we started moving upwards, right, and then sideways, we were kind of out of the woods. Obviously, the COVID crash. So these are not blind buy and sell signals. I want to be very, very clear. Now, so for Bitcoin, the buy signals, as far as being in the green bands, it's been pretty solid. Been pretty solid to pick local bottoms by buying the green easy band levels. That's not going to be the same for all assets. And it's not going to be the same for Bitcoin, forever moving forward. If we apply this to something like, I don't know, Chainlink. Actually, Chainlink's kind of a busy chart here, but I think a better example might be XRP. And then we'll go to Cardano in a second. And I know I've got a lot of stuff going on this chart. Just kind of ignore that. You see XRP. Historically, you get oversold in XRP and you get rewarded for buying these dips, and then you get periods of being up in the red easy band region, and you get rewarded for having a profit taking mindset. But then let's go to Cardano, and if you had simply just been using this as a buy sell signal in a trending range bound market, kind of a sideways trending market rather, yeah, it can be a pretty decent signal. But in a strong bull market, you can spend some time above these red easy bands. The market can get very, very overbought and stay overbought for a while, right? So if you had just initially taken profits here, then yeah, you that's great, right? You made a profitable trade, but you missed out on a lot of the run. And likewise with the downside, especially with altcoins in the easy bands in a bear market. This can just stay oversold and grind all the way down for a long period of time, but we can start to actually see the trend changing. So we spent a lot of time with, one or two mean reversions here for Cardano. And now we're starting to respect these again, right? We're starting to find some support, mean reversion, spend some time on the 21-week simple moving average, find support on the green easy bands again, right? So we're starting to level out, and these easy bands are starting to level out, and we're not spending nearly as much time in the green easy band region. This is really important because it is telling us that maybe it's time to start looking at Cardano as a longer term investment or a longer term play going into the next bull market cycle, if your assumption is that there's going to be another Bitcoin bull market with the next Bitcoin halving or Bitcoin spot ETF and such. So this is, the trend's down. We don't necessarily want to be just buying blindly here, right? But if we are looking for a mean reversion, right, we can catch those, or we can just be looking to be in our shorts until this starts to level out, right? So even if you don't use the easy bands, I would highly recommend you find another indicator that you like that helps you accomplish those two things. One, identifying the trend, not super difficult to do, not super complicated, but then also identifying when something is overbought or oversold. Guys, the last thing I'll say here, when something is overbought, you do not want to look at an asset that is overbought from a long-term investing perspective. A lot of people bought Cardano, a lot of people bought crypto, a lot of people bought Bitcoin, whatever it is, in these overbought regions, and it's just incredibly risky. It's incredibly risky because not only is it overbought and potentially going to see a large correction, a simple mean reversion from the red easy bands all the way down to the 21-week simple moving average is a 35% correction. So if you have a long-term value investing mindset, you want to only be paying attention to the asset that you're buying when it's oversold, right? So let's just think about it this way. Now, it's obvious that this was not the best buy signal in the world. But what is the lesser of two evils? Would you rather have bought Cardano with a long-term bag of Cardano at 40 to 50 cents? Or would you rather have bought it up at $2.50? Well, this indicator can help you avoid this one. It's not necessarily going to pick the bottom, especially on some of these altcoins. It's not going to necessarily be like the buy signal to get you in at the low, right? Yes, it's pretty decent at showing when it's oversold and when a mean reversion may come in. But at the very least, it can tell you don't buy here for a long-term hold. Don't buy here for a long-term hold. Don't buy here for a long-term hold. Even buying here, right, for a long-term hold, right? We've gotten better opportunities in the green easy bands, right? And you are already deep into a run, taking on a lot of risk, right? So at minimum, a lot of people can save themselves a lot of money from just a very, very basic, simple indicator saying, guys, don't buy, don't look for a long-term position when this is overbought. This is when we want to be having a mindset of taking profits, looking for potential reversals and potential opportunities to short the market based on expecting a mean reversion back to this 21-week simple moving average. But what we don't want to be doing is just blindly buying when we're overbought like this. It can get you in trouble. Even if you had bought down here at 15 cents, yeah, you did great, right? You did great, but you had to sit through a 50+% correction back down to like 8 or 9 cents, right? Guys, I hope you enjoyed this video. If you did, please like and subscribe. Tune in for part 2 where we're going to go over the margin pressure levels, and I'm going to show you guys how to build out support and resistance clusters like this in the next couple of parts, so that you can identify strong support and resistance and identify some trades like shorting this down here or buying this support, trading it up. That's what I use to trade, and hopefully it'll help other people as well. Thanks so much for tuning in. Catch you next time. Peace.